today let's continue with bank reconciliation statement. Now I'm going to take up the second case, which is when the favorable balance as per the passbook is given. Now the favorable balance as per the passbook means credit balance in the passbook, which means that some balance is lying deposited in the bank. So whatever money we deposit in the bank, that is lying deposited in the bank. So that is a favorable balance. So from the favorable passbook balance, we have to arrive at the cash book balance. Now let's see what are the items to be added here. The first one, checks deposited but not collected or credited by the bank. When the checks are deposited, the amount is added to the cash book, right? So as soon as we deposit some check, it is added to the cash book, but the bank will add it only when it is collected. So this basically increases the cash book balance, but the bank balance is still less. So this amount should be added. Anything which increases the cash book balance, that is the cash book balance is higher and the passbook balance is less because of this transaction, it should be added, right? Okay. Now look at the next one here. Deposited checks or bills receivable dishonored. When the checks, once the checks have been deposited, it is added to the cash book balance. It is also, it's assumed that the checks have been collected and it is also added to the bank passbook. But supposing, okay, it's dishonored, so basically it is added to the cash book, but since it is dishonored, the bank balance will not increase, right? So these are deposited checks. Once the checks are deposited, they are added to the cash book. But since they have not been collected because it has been dishonored, the bank balance will be less. So again, cash book balance is more, whereas the bank balance is less. So this should be added. Fine. Then bank charges charged by the bank. Bank charges charged by the bank will again decrease the passbook balance because the bank has charged some bank charges, so that will decrease the bank balance. But in the cash book, the balance will be more because we do not know how much bank charges the bank had deducted. So again, a higher cash book balance and a lesser bank balance, so that should be added, right? Okay. Now the next one, any interest charged by the bank. Interest charged by the bank, again the bank deducts the amount from its balance, right? So bank balance becomes less, whereas the cash book balance will be more. So this should also be added, right? Then any direct payment by the bank as per standing instruction by the bank as per standing instructions, again something like insurance premium, electricity bills and all, right? So if you have instructed the bank to pay them directly, so as soon as the payment is made, the bank will debit the amount, so the balance comes down, whereas in the cash book the balance is still more, and as soon as we come to know that the bank has debited the amount, then only bank has paid the amount and the amount has been debited, then only we can put it in the cash book. So till that point of time, the cash book balance is more, right? So here again it is a higher cash book balance and a lesser bank balance, so it should also be added, right? Then Any bills payable paid directly by the bank, paid by the bank but not recorded in the cash book. But not recorded in the cash book. So bills payable means money has been paid, right? So when the bank pays that, the amount will be debited. So the bank balance comes down, but the cash book it will be higher. So again it will be added, right? Then any wrong debit given by the bank, any amount which has been wrongly debited, right? That will be added. And there can be one more case, which is checks received and recorded in the cash book. You have received a check and the check has been recorded in the cash book, right? So when we record it in the cash book balance increases, right? But not deposited, right? But the check has not been deposited into the bank. So obviously when the check is not deposited, it won't be collected, so no process can happen, right? So the bank balance will be less. So in all these cases, we see that these transactions will result in a higher cash book balance, and a lesser passbook balance. So all of them should be added, right? Now I'll write down the items to be deducted. Now in the items to be deducted, any transaction which leads to a reduced cash book balance, right? That should be deducted. Fine. Now let's see the first one. Checks issued but not presented for payment, right? So that means when the checks are issued, it reduces the cash book balance because it is recorded in the cash book, but not presented for payment. Till the time it is not presented for payment, the bank balance will be more than the cash book balance, so it should be deducted, right? Second one, checks deposited directly into the bank by a debtor. When the checks are deposited directly into the bank by a debtor, the bank balance increases, the cash book balance is less because we do not know when the debtor actually deposited the check, and we will record it in the cash book only after we get information on that. So till that point of time, the bank balance is more, cash book balance is less, so that should be subtracted, right? Interest allowed by the bank, again when the bank gives some interest, it increases the passbook balance and the cash book balance is less, right? Any dividend collected by the bank again increases the bank balance. Dividend collected, fine. And then any bill of exchange collected, realized or collected, that again increases the bank balance, but the cash book balance will be less, right? Any wrong credit given by the bank, when the bank gives any wrong credit, it will result in an increase in the bank balance, whereas since it is a wrong credit, it will not be put in the cash book, so that will be less, right? Wrong credit given by the bank. Then the last one, checks deposited into the bank but not recorded in the cash book. Checks have been deposited, so they will be collected and the bank balance will increase, but they have not been recorded in the cash book. So you have forgotten to record it in the cash book, so that means the cash book balance will be less. So in all these cases, the cash book balance is less and the passbook balance is more. Bank balance is more, right? So these items should be deducted here. Fine. And the first one that I showed you, items to be added, here the cash book balance is more and the bank balance is less. These items should be added, right? So this is the second case when the favorable balance as per the passbook is given, right? And we have to arrive at the balance as per the cash book. In my next session, I'll take up an example on this and I'll show how to do this. With that, I end this session. Bye.